Today in crypto, the price of Ethereum has been going crazy. A key Ethereum improvement proposal could make a big shakeup in the economics of Ethereum. ETH 2.0 testnets are being rolled out, and Layer 2 scaling solutions are getting a lot of love recently. The Cryptolark, this is where you subscribe for all of the latest and the hottest happening out there in crypto land. By the way, if you are looking for a great user-friendly place to buy yourself some Ethereum with low fees, then check out Kraken. It is one of the top exchanges for buying and selling crypto. There's a link in the description where you can get signed up. So Ethereum has been exploding recently. We just closed 7 straight weeks of green on the ETH USD charts. I mean, this hasn't happened since early 2017, and we all know how 2017 played out. The price of Ethereum has soared by 114% so far this year, trading at around $270 at the time of recording this video, which is totally crazy. But in spite of the crazy price action, it seems like Ethereum really might be gearing up for a lot more price appreciation during the coming year. We are days away from hitting a golden cross for Ethereum, which could be a big, strong confirmation of a bullish bias for the price of Ethereum moving forward into 2020 and potentially even beyond, depending how big the trend becomes. Now, the price of Ethereum did get pushed back at the $277 mark, which is a historical area of support, now acting as resistance for the price of Ethereum. Looking upwards, we watch for Ethereum to face resistance at $290 and then all the way up at $370, a big area of resistance, as that was the 2019 cycle top. If we can crack that $370 number, then hold on to your butts, because this thing might start getting totally crazy. Seeing ETH over $500 again in the next couple of months would not surprise me at all. But if the market turns around, then watch for support levels down at $220 and $200 for Ethereum. But it seems to be breaking out and really, I think, leading the charge of alt season right now, which is super important because so much of the economic energy of the entire crypto economy is centered on Ethereum. Most of the dApps out there, they are built on Ethereum. Most stable coins run on Ethereum. Most decentralized finance protocols are built on Ethereum. Most bridges from other blockchains, they go to Ethereum. Most decentralized exchanges are on Ethereum. And of course, the most developers are building on Ethereum, blowing any other chain out of the water. Nothing else is even close. ETH is leading this rally, which is very significant for the overall crypto market. Also, some interesting data for you. The number of active Ethereum addresses rose by 21.5% over the last week, and the transaction count for Ethereum grew by 13.2% over the last week. It seems that interest is growing in Ethereum right along with the price of Ethereum. But why are people taking a renewed interest in Ethereum anyway? Well, I have a few reasons that might just be some of the catalysts that are actually sparking this new fascination with Ethereum. The first one is this, EIP 1559, which is an Ethereum improvement proposal co-authored by Vitalik Buterin. This is proposing a portion of fees paid to miners get burnt. Yes, you heard that right. Some Ethereum fees may be burned in the future. So here's how it's going to work. There will be 2 components to a transaction fee. There will be a base fee, and then there'll be a premium fee that you can pay on top of that. So the base fee is basically a set fee that is calculated as per demand for block space in any given block. Now, this fee, of course, would then rise in times of high network activity and then descend in times of lesser activity or perhaps more sporadic use of the network. However, of course, if you want to have a faster transaction and ensure that your transaction definitely goes into the next block, then you can pay a premium fee. Now, in this situation, the premium fee would be accepted and the base fee would be burnt. Now, this is really important because setting the base fee relative to demand prevents miners from being able to game the fee market, and of course will over time cut the amount of Ethereum, as even just little bits being burnt over time adds up to a lot burnt over time. It would also allow for additional implications for decentralized finance applications, allowing, for example, burning a bit of Ethereum every time a stablecoin transaction is sent, just as one example of a potential use case. This improvement proposal also has received really widespread support from the community and probably stands a rather decent chance of passing into actual code on the Ethereum mainnet. That being said, the Ethereum economic picture overall has remained a point of kind of confusion and of contention for quite a few people, since Ethereum has a policy of minimum necessary issuance, which essentially means that there is no supply cap on Ethereum at the moment. One of the biggest criticisms against Ethereum is that there is no hard cap for the supply, which at this stage is definitely true, although the topic of capping the supply has certainly been discussed by the Ethereum community quite a few times before, but it has never made it into being an Ethereum improvement proposal up to now. But Ethereum is on a massive deflationary curve. We've already seen block rewards drop from 5 down to 3, down to 2 Ethereum a block. So that's a big reduction already. So that brought us down to an annual inflation rate of around 5% for Ethereum. But with Ethereum 2.0 phase 1.5, we can expect the annual inflation rate of Ethereum to drop under 1%, which, by the way, is less than Bitcoin will have until probably like 2032, when the inflation rate drops to around 0.22% for Bitcoin. So take a look at this chart here, which shows the Ethereum economic trend and how the block rewards are going to be playing out over time. And take note of the huge drop that we are likely to see happen in 2021. Now, very low inflation, to be clear, is not a supply cap. But, for example, in this scenario, if we had a daily issuance of new Ethereum potentially dropping down to 1,000 Ethereum a day from the current approximate 10,000 Ethereum a day, that would be massive. And even if that was a constant for the future, so if we had 1,000 Ethereum every day, then as time goes on, this continues to be a smaller and smaller percentage of the overall inflation of Ethereum until it basically reaches a point of really near irrelevance. Now, you can disagree with that economic model of permanent, albeit very small, inflation of Ethereum, but I don't think you can really deny the reality that Ethereum will become a very scarce asset in the coming years, especially as the network effect of Ethereum continues to grow. And of course, you have demand for Ethereum growing with that expanding network. And then, of course, you have the daily emission rates plummeting in a massive way. Just imagine what all that does to the price. Okay, now moving on to some Ethereum scalability news. The Ethereum scaling startup Optimism has announced the alpha release of its virtual machine called the Optimistic Virtual Machine. Now, the OVM is basically a replica of the Ethereum virtual machine embedded inside of the Ethereum virtual machine, which has a very important function of allowing developers to use the same developer toolsets and smart contract languages when working with optimistic rollup technology. Rollups, in case you are not familiar, by the way, are very powerful layer 2 solutions for scalability that have recently been released on Ethereum. So transactions are thus done off-chain, and then they are aggregated and published on-chain. There are now multiple implementations of rollups that are being brought out for Ethereum. The OVM release from Optimism is definitely a big step, though, towards allowing more developers to easily build layer 2 solutions on top of Ethereum. And we have a new player in the rollup game as well. The Arbitrum rollup has just gone live on testnet. So what all of this means is that while Ethereum is still on the road to the major 2.0 upgrade, right now we have strong layer 2 scaling solutions to help Ethereum along the road with scalability until we get the full 2.0 upgrade. And by the way, everything I've just mentioned, most of it's already live in some form on Ethereum. So we're already seeing, for example, decentralized exchanges using the roll-up technology. Look, when the new money comes in, and it's going to come in. In fact, it already is coming in right now. Just look at the price of Ethereum. They will be looking at a very different picture from what we saw back in 2017. We have so many useful and fully operational products on offer that will give people real opportunities, not just the hopes and dreams of white papers. And in many ways, of course, decentralized finance is leading this charge for Ethereum. But it's not only decentralized finance, even though it's getting most of the attention. There's also collectible art and in-game items and invoicing and a whole bunch more stuff happening on Ethereum. But for the regular investor looking to make money, Ethereum is going to offer so many opportunities to actively create money. Things like the Ethereum No Loss Lottery app Pool Together, which by the way just hit 1,500 users, that's going to start getting a lot of attention moving forward. Also, I would like to know from you, what Ethereum decentralized finance product have you actually used before, and which would you recommend other users that they need to look into? Personally, I would say you should check out KyberSwap for super simple Ethereum token exchanges. Check out Uniswap for earning income by providing liquidity to the markets. You can go to Compound Finance and earn on lending out your stablecoins or your Ethereum in a decentralized manner. You can go over to Maker and take a loan and get some DAI, or you can take $10 of Ethereum's DAI and put it in the Pool Together lottery and try and win a few bucks. Just a few ideas, of course, but I want to know, have you tried any of the services I just mentioned or some other ones that I haven't mentioned? And if so, what has your experience been? And if you haven't tried any of this stuff, well, why not? Also, on the topic of decentralized finance, we must always remember that risks remain and that we are super early days when it comes to a lot of this technology. But decentralized finance has also given us a solution to help mitigate this risk. A company called Nexus Mutual actually offers smart contract failure insurance, which is pretty damn cool. I think adds an extra layer of security to people who might be worried, like, well, if the smart contract's not safe, that's got you covered. Anyway, Ethereum is looking forward to a few very exciting years. ETH 2.0 is coming. It's just a question of when. The team have said that they have a 95% confidence that July 2020 will be the launch date for ETH 2.0, so we can probably expect a delay on that date. But it's coming nevertheless. Sigma Prime's Lighthouse project has just unveiled an Ethereum 2.0 testnet, which it hopes will be capable of handling 100,000 validators during a stress test, which is pretty gosh darn impressive. Another team called Nimbus has been testing Ethereum 2.0 on smartphones. I mean, look, ETH 2.0, it's gonna be crazy. We're talking about many magnitudes more in scaling thanks to sharding. We're not even talking about layer 2 solutions, as they're already adding scalability, but this is going to be on-chain scalability, layer 2 on top of that, crazy scalability. We're talking about more efficient smart contracts, and yes, of course, staking so people can earn a passive income with Ethereum. I'll share more details about staking with you when the time comes, so definitely stay tuned for that. I'll let you know as soon as we have a very definitive path towards how you can stake your Ethereum for 2.0. But if the current price action is any indicator, then ETH 2.0 FOMO, it might be starting to kick in now-ish. Anyway, this thing is going to be a total beast, man. Ethereum, totally crazy. And of course, all that Ethereum being locked up in decentralized finance, Ethereum staking, increased users using the network, using cool apps, and then fee burning if EIP 1559 actually gets passed. Wowzers. The economic equation for Ethereum is reaching a critical mass of positivity. Anyway, those are just my thoughts. You let me know your opinion of ETH 2.0 and the current price action that we've been seeing with Ethereum down below in the comment section. Daily reminder, you're awesome. You've got this. You're more powerful than you know, and you're freaking rock, man. So thank you so much for tuning in today to watch the video. I hope you enjoyed it. I hope it was useful for you. Make sure to hit that thumbs up button. Show a little bit of appreciation for the YouTube algorithm, of course. And subscribe to the channel if you're new around here. Long live the blockchain, and peace out till next time.